Abbey Building Society was the most traded stock, accounting for 26% of the day's traded stocks. Now, for more on market sentiments going forward, I'm joined in the studio by B.A. Peterson, an analyst at Financial Derivatives. Well, thank you so much for joining us, B.A.
Yeah, thank you.
Now, attention seems to be gradually shifting at the moment from the high cap stocks to the mid and small caps, like I mentioned earlier. Yes. Now, Abbey Society was the most traded stock, accounting for 26% of yesterday's trade. What are your thoughts on these?
Well, basically, we believe that that's going to be just a cross deal from one major stockholder to another. So we don't see anything extraordinary has gone in that transaction other than a cross deal. That's that. Then looking at people now moving, investors rather, now moving on to mid and low cap stocks. When you look at the room for growth for the highly capitalized stock, there's little room for growth and in terms of capital appreciation. So investors are actually looking for good bargains, and they can actually find them in the mid and low cap stocks. So the high cap stocks have already grown this year, so they're coming down to the mid and low cap stocks. They've grown, they've also declined. So you know it's easier to grow from a lower base than from a high base. So that's why we're seeing that move by investors. All
right. Do you think we're going to be seeing more of these?
Yes, we're going to be seeing more of these going forward throughout this period, because we know it's like where sentiments are low or negative, rather investors' confidence are beginning to decline, being that there's there's liquidity concerns in the market. So therefore, they're going to be seeing good bargain huntings, and people are going to be trading on caution. So if you want to trade cautiously, they're going to be looking at low cap stocks, mid cap stocks that's going to give them some room for growth when they go in.
All right then. Now, we also saw the likes of Courtville, Just Breweries and Cutix all gaining the 10% markup. Now, what's your outlook for that sector?
Okay, in terms of Just Breweries, it's gaining virtually 10% every day for the past 3 weeks. This is the 4th week, and that rally just started when the Plateau State government, which owns significant stake in the firm, announced it's going to bail out the firm by pumping in 700 million naira into that. So it may be people are just reacting to that, expecting that might be a sign for a possible takeover, being that the brewery sector is undergoing consolidation recently with the entry of SAB Miller and the acquisitions by the other big boys in the sector. But on the flip side, we can ask ourselves, who knows, maybe Just Breweries may employ significant personnel that are Plateau State indigenes, and the government have just said, wow, if we sit down and this goes under, unemployment might just rise. And with insecurity, we know that, hey, when there's unemployment high, people will just look for the next alternative thing, and crime is going to spike. And being that that state is very volatile, I think the government did something, but we cannot definitely make a definite statement that it's because of this or that, but we just believe that sentiment is what's driving that. We haven't heard, and who knows, an investor might be positioning, might be acquiring stocks daily to take over that firm. Right. And in terms of Cutix, yeah, we are good in the industry. There's really nothing so exciting for us, but we've seen their recent results, Q1, the top line grew by almost 38%, while bottom line grew by about 69%. So that might be why investors are actually keen into that stock, because it's always had this ability to always bounce back to the 1 naira 90 kobo 2 naira level. So at the 165 last week, now 179 opening this week, it's gone to 190. So that might be because of that.
A bit as well. Okay.
Yes.
Well, meanwhile, I also like to get your thoughts on the indices and the burst. Now, they all closed down except the insurance index. Now, would you attribute this to the fact that the market is still awaiting their earnings, and with speculations that it could turn out positive?
Okay.
Do you think that's
yes, that could be a fact. That could be a fact. Yes, but as with time, the insurance stocks have been undervalued. People have overlooked them because the sector is being one that a lot of clients or persons have some doubts about. But looking at that, okay, they've had difficulties in releasing their full year result for the previous year. So we expect some form of good performance from some fringe players or big players. We've seen the Mansard, the result was impressive. We've also seen ICO. ICO was impressive, and also the insurance stocks, being that they are low, they are virtually trading at their book value or even below book value most time. When you look at the numbers, we might see investors taking a look at that sector. And with the looming consolidation, so people might just be speculating and saying who's going to acquire who. There was supposed to be an M&A between Cornerstone and Linkage. That didn't work. So who knows what's going to happen next time.
All right then. Yeah. Well, now moving on to all the news in the market. Now, July year-on-year inflation rose by 0.35% to 8.75%. Now, what's your outlook for inflation? I mean, should we be seeing? Those numbers are going to be released next week. What's your outlook?
Okay, our outlook, we expect it should remain within the range, nothing significant, but we might see a slight shrink in the sense that given the industrial action, we can see the ASU strike, the health workers, and possible payments that the government might have to make to pacify these unions that are actually going on strike. So that has actually helped to tone down production a bit. So we don't expect any spike in inflation. Rather, we expect it to shrink a bit.
Well, we're
looking at our estimate is about 8.64, 8.65% for August.
All right, let's see what next week will unfold, I guess.
Yes.
Now, moving back to the market, what's your outlook for the rest of the year? Now, we have seen it at the 40,000 level, I mean, at some point this year. Now, however, it's hovering around the 35 to 36,000 levels, you know, as recent trades have shown. What's your take on it?
Wow, it's going to be a rough final quarter for the year. We don't expect anything fancy from Q3 results, given that liquidity has been mopped up from the banking stocks. So being the banks are the ones that are actually going to oil the economy, their capacity to actually lend to businesses have been greatly impaired by the debit from public sector deposits by the CBN. Almost over ₦1 trillion left the bank's position. They picked up those funds at virtually no cost, and they were able to lend out to some businesses. But let's look at it that their net interest margin has been squeezed. Interest rates, the cost of lending has gone up by an average of 2%. So how many businesses can afford to borrow at that rate? So when you look at that, the profitability of the sector, banking stocks and other sectors have been threatened. Then look at commodity prices soft. Those who want to sell within the Nigerian market are not going to be faced with pressures from cheap imports coming in from crude palm oil and sometimes sugar and wheat. Then also look at the exchange rates. The naira is going to be weaker, so that's going to be implied cost. So profitability is going to be threatened. So let's bring it down to basic economics rather. If profitability is threatened, I'm now buying in to partake in future earnings of a stock. So if profitability is threatened, why should I buy? So that I don't see any rally. We're going to see this market bottoming at 36,000 points as it's been going back and forth this month. Yeah. So for us to see the banking stocks should bleed a bit. Then also expect some other performance from consumer goods, because it's an election period, and we expect some spending, and this funds is going to trickle down to people. People will spend, and we expect consumer goods to do well.
All right, then. Well, thank you. I guess we're going to have to end it on that note.
Okay.
But thank you so much. I've been speaking with B.A. Peterside, an analyst at Financial Derivatives. Well, that's where we leave it from the Open Exchange West African team for today. After the break, we cross to international programming. CNBC Africa is back at 12 p.m. Central African time with Power Lunch, and I will be joining you for the West African segment. We'll keep watching CNBC Africa.